We had pretty bright red on Monday. Interesting note, I put it here in Telegram for daily profit play. So based on how we calculate our, highs and lows, it was a pretty interesting 2 days because close, right at the close Monday was our expected move. Right at the close yesterday was our expected move. So good thing is what did we need? Well, we made money earlier in the day, which was nice. Um, if you look at our levels, still stayed safe all day. So good calculations for the day. Love it when a plan comes together. Today's a new day. Futures up about 0.36%. Wanted to address a couple of emails. Let me see who sent that email. Somebody was asking me an email about 1DTE. And let me share the screen here. Yep, screen's up. Okay, so here's the heat map I was talking about. Pretty decent day, 64.7% of stocks advancing. Futures this morning up a little bit. NVIDIA up like 0.7%, 0.75% going into this morning. 6,900 is a pretty key level. Looks like we're going to be gapping up a little bit before ahead of that this morning. So 0.35 will we gap and hold. Positive gamma above 68.75. Let's do our measured moves. SPX pre-market plus 39.33. $39.33. We're looking at a VIX. Pull this over here. VIX pretty decent smash from 2205 down to 1883. Okay. All right. 31.7 thinker swim. I'm getting a 39.33 pre-market. Tasty. 39.33. Again, just to be on erring on the side of caution, I'm going to take the higher of the two. So, do I know why one is higher than the other? No. But whatever one is higher, I think that's our safe one to take for the morning. The one difference with how I call out the measurements in the morning is, let's take these levels away for a second. We'll put those on fresh. Recenter 68.90. Okay. Look at our highs and lows. Positive gamma above 68.75. Friday the 27th, end of the month. Let's have a look at some gamma flows here. So pretty substantial call walls back to that 7,000 handle. 69.50, 69.75 seems to stand out just ahead of that 7,000 level. 6,900 having a decent level. We're just below that. So this is for Friday's expiration. Going into today, a lot of it points higher. So possibly running into 69.50. So 69.25. I mean, 6,900 has been a pretty key spot. We have highs here at 69.08, 69.10, 69.15. Look left on your chart. We know that we have that 7,000 handle that's proven to be difficult to overtake the last couple months. Heading into NVIDIA earnings today after hours. Will this be a drift type day to the upside? Getting into NVIDIA earnings. I mean, I'd like to think the market's not gonna give us an exact replica of what we saw November 20th, which was big earnings, markets up 1%, 1.5%, only to see it all go down. It'd be a frustrating day to say the least. So today I think calm before the storm. I mean, volatility kind of opens up probably post NVIDIA. What other earnings do we have on tap for today? NVIDIA, Trade Desk, Salesforce, Snowflake, probably some other ones. Take a look and see what we have for some flows. All right. Jeff heading some basketball tonight. Nice. Okay. Real time gamma. So here's pre market 6,900 to 69.25 and 30. I mean, to me, call wise, I'd want to be selling 69.30 or higher, call wise. Put wise, I mean, if the market's going to stay up today, especially with a bit of a gap, and we could gap up and stay up, gap up, pull back, and still kind of drift up towards these higher levels. I mean, what's our likely open here? Let me measure our open based on that futures gap. Let's go. Okay, let's see what we have for NVIDIA. Got a mixed bag. A lot of bullish, though. A lot of bullish into March. Let's take a look at TTD for Trade Desk is all after hours. I'm going to see if some more flows come in on these. CRM. A lot of bullish CRM. Quite a bit, actually. March 26th expirations. Decent amount of premium. All right. CRM, I'd put a little bullish asterisk next to, and then Snowflake. Bit of a mix. Feb 26th, 7th. So latest flows are pretty bullish on Snowflake. Let's take a look at those charts. IONQ mix. Not a lot coming in there. PSTQ, PG. Those are longer term. VIQ. VICI. No. All right. So Snowflake, I kind of look reading on that one. Let's have a look at the chart for a moment. Okay. Earnings after market. Debit spread might be cheap enough. Feb. Couple ways to play it. Either bullish immediately into the earnings play after hours, or go to the expect to move and then try to buy the low of the expect to move, see if it gaps up. I'll read this, so I'll put Snowflake on the list. Okay, let's get a little prep action. What else do we have for earnings? Celsius. Okay. Want to see what this one looks like fundamentally. Down, sheesh, down 79%. Good Lord. Liberation Day was not kind to the energy drinks, or this one at least. Monster Beverages is up, but let's see this one fundamentally. CELH. Okay. Yikes. It depends on the setup. I mean, calendar spreads are great when I think that the expected move is going to be greater than the actual. Right? There's that build up in volatility, typically the vol crush. One that I think CRM has. Let me see. I was at the gym last night. Had some. Let me take a couple screenshots here. So we look at IV rank. Um, so it has a lot of put skew on this one. CRM. What else? Snowflake, CRM, SAP, Shopify, Palantir. Like we're talking like 90 plus percentile put skew, which means it should be difficult for prices to hit these expected moves in like the next 2 to 4 weeks. So Palantir could be one. I mean, probably the best trade if you're considering taking advantage of that put skew is looking at some type of. I mean, a Jade Lizard wouldn't be a terrible strategy where it's a naked put with a bear call spread. Just keep it outside the expected moves. If you go calendar spread or straddles, also not terrible. Like short straddles. Short strangles, not terrible either. It's just undefined risk, which can be a little dicey around earnings. But if you want to write these down, Palantir, CRM, Shopify, SAP, Uber, Snowflake, Amex, even IGV software, right? All those have high put skew right now. So I'll put those in the chat. So Fig, Palantir, CRM, Shopify, SAP, Uber, Snowflake, AXP, and IGV. So those have like anywhere between 80 to 90% put skew, which means that the put premium is pretty high. It's going to be difficult for those stocks to continue at this pace to get beat up as bad as they've been being beat up. Does that make sense? So we can look at a couple opportunities there. Celsius Holdings. See what else we have in the earnings side. Vistra VST. ACR, ACMR, Baidu. Okay. I've got puts on Baidu. I'm not really worried about that one. Rackspace RXT. Nothing. WBD. Both getting some bullish love. Got some April calls on WBD. Haven't looked at that since the merger noise. It's getting some love. Nothing like 288% on a streaming service that's just going to get bought out. Think that I'm not chasing a move like that. Core Weave. This one's got some flows. March and April strikes. Pretty bullish on Core Weave. Okay. Insider selling, volatile share price, 12 price to sales. Nope, I don't like that. Don't like seeing a cash flow model that shows lesser ticker prices. Let's go to the daily. I mean, it seems like a pretty good pattern. Something like that. Might take longer to play out, but if it really builds out a base here around like $60, this could be a good one for eventually break out, but maybe not just chasing it now. Does have a decent amount of flows though. A lot of them traded this week. Pretty bullish. March into April. It's up a little bit. Yeah, I'll put it on here. It's got some decent flows. Let's see here. Dell. OPK. CS. Those are long term. Duolingo. I wish I would have shorted the crap out of this thing. Those are longer term. It's like the downtrend might continue here. Duolingo. Ugh, I wanted to short that thing so bad with a 500 call. Wow. what a dump. Look at that thing. Down 80%. Oof. All right. Any other notables here? Duolingo. Friday earnings. I'm rarely interested in Friday earnings outside of the energy ones when it's like ExxonMobil, Chevron. Nothing I really see this week. So I've got Snowflake, CoreWeave, CRM. I like to take a look at with those put skews and a couple other ones that I posted. Yeah, we'll take a look at those. I'll keep that handy this morning. All right, let's get some daily profit play prep. Gamma. Uh, 69.25, 69.30, possibly up to 69.50. So if I'm playing defense today, that'd probably be my defense is trying to get this thing pinned around 50. Market's up 0.37. We're going to get a little bit of a gap this morning. Let's have a look at that here, kind of measure out. I've got a plus minus 39, 33. Let's just round it up to 40 to be safe. 0.37 gap up. 0.37 gap up. It's around 25 points. So we're going to start here. And then we'll go another 40 points. So 69.56 potential measured move just based on market maker expectations. Put that in blue. And then from the close yesterday, go down 39 points. We'll go 40. About 68.50. There. So that's roughly the market maker move based on a gap higher. There's going to be a bit of put skew. We've been watching that in the markets, pricing skew where we gap here. We have a little bit less space on the upside and more space on the downside just because the VIX is still, somewhat elevated. We're not trading a 14 VIX. We're trading a lot of flares up into the 20s. So that's our market maker expected move. That seems pretty reasonable, honestly. Could it get there? Yes. Looking at levels here, it's like pretty solid resistance around 69.25. But if we breach that, 50 seems gettable based on the expected move. So, of course, it depends. What's our premium? If I sold a 55 or 60 call spread, I want to make sure I'm getting a decent amount of premium for it. So we'll take a look at this. Positive gamma above 68.75 this morning. Hopefully it's just going to be like a, slow grind, positive drift day, or at the very least, just stay above 68.75. We'll see. With earnings coming up, big earnings today after market, probably a lot of volatility and a lot of directional flows coming in Thursday, Friday, post NVIDIA. Okay, we got 3 minutes for the open. A couple of emails from yesterday. Give me a sec. Okay. Let's see. Somebody emailed me yesterday on Dave, I saw your email on taking extra DPP. I'll send a reply. So Dave P sent me an email on taking multiple daily profit play type trades, multiple iron condors on the day. I'm just going to send you a video. There's an entire strategy. There's two traders that I know that use it quite a bit. They just do multiple iron condors throughout the entire day. They basically do a new one every hour. It's something you can't get away from the computer on, by the way. So it's very active. It does work. You get into the afternoons where there's a lot of potential gamma risk. As the day unfolds, the expected move typically is biggest at the beginning of the day. And then as the day unfolds, it gets smaller and smaller and smaller. So, you're relying on price to be very cooperative for the expected move. So any of those late afternoon, 3 p.m., 3:30 p.m. days where the market may decide to move more aggressively, that's what I don't love is I don't love taking those trades. Late in the day, if I'm trying to call the top and bottom with an iron condor or daily profit play type strategy, if there's any direction, you can get in trouble because all of a sudden it's we start out with a 39 point move, and by 3 p.m. it's 5 points, right? So are you going to do an iron condor that's only 5 points above and 5 points below, trying to get some premium on that, and all of a sudden the market moves more than 5 points? That's all I'm saying. So I'd say in the mornings, 9:30 to 10:30, 10:30 to 11:30, that kind of 2-3 hour window. putting in some trades, I don't mind that because I think there's a decent amount of premium there. Plus, you got to get a feel for what the market can do, throughout the day as well. So I'll send you a link. Just it's I think it's what the heck's the guy's name? Is a gentleman in he's in Scandinavia. It's like Norway or something. He runs a strategy. It's one of his favorite things. Is like a multiple iron condor strategy, but a little different than how we do it. But I'll send it your way. All right, price feed gapping up. We opened up around 69.14. There's our gap. Expected move. Let me just measure this. We're going up 40 points or so from here. Yep. So that's accurate. About 69.56. VIX box around 70. Let's see what the deltas look like this morning. So, I mean, this doesn't seem awful. I mean, 15 delta at 65, 70, 75 with that gap higher. I don't want to step in front of a buzzsaw, right? In case the market's just going to rip all morning. But can we sell like a 70? 70, 80, 75, 85? Let me go 70, 85, 75, 90. That's 12 delta. And I'll do put side 15 wide. So I'm gonna go. All right, I'm gonna put in two 15 wides and see. Let me see if I can sprinkle in some defense here as well. So 70, 85. Again, you can tighten this up if you want to go 5 wide or 10 wide. You can. I'm gonna go 15 wide on 2. 70, 85. And let's go. Make sure I'm not missing anything on the gamma side. So that's 68.50. So I'll go 40 by 25. All right, I'm going to go $1.50 on this one. And then sprinkle in another one 15 wide. Another one for $1.50. In case there's any direction, get a couple fills there. Right out of the gates. Yeah, that's what I'm talking about. It's that I can't think of it's like Theta Profits or something like that is his channel. So yeah, that Tammy Shambliss, she runs a multiple iron condor strategy. Her session, like the interview that she did with her was pretty good. It's like I said, it's like the only strategy that they do. So, if you're looking to do that rather than just stumbling upon it, like, oh, I think this might be good. It's like, follow a session that's what somebody does like full time. So if that helps as a reference point, then great. Yep. Theta Profits. There you go. Yeah, he just did an interview with himself, actually. I saw that this last week. All right. So let's see here. I'm looking at, let me see what 5 wide looks like here. I'm going higher up on the 15 wides. I'm going to try to go 5 wide, like right at our expected moves. So 55. So 55 is about a 15 delta. I'm going to go 5 wide here. And put side is 49. I'll go 45. 68.45. I mean, delta wise, I feel like even going up to like a 10 delta, or I'll pack it in right here at an 8 delta. 55. All right, let's see if I can get $1 for this. Come on. So I'm trying to do a 55 by 60. This is 69.55, 69.60 for a bear call, and then a 68.55, 68.50 bull put. I'm trying to get $1 out of that 5 wide. Come on. Mike, those numbers can't be right. You're 700 points away from price. Also, the August 21st. Is anybody looking at that stack strategy I talked about yesterday? Come on. Give me $1 here, would you? All right. Our this 5 wide has to be close. Let me see if this gets filled. I'll put this in daily profit play. So daily profit play. Today's the 25th. Okay, looking at a 5 wide, just put that in the chat. Come on, just a little push to the upside. I mean, I should probably let's bump this to 60, 65, 75, 70, even going 15 delta. Try for $1. All right, flipping this around a little bit. I'm gonna do a quick edit on that. So I'm doing 69.60 by 65, and then 80 by 75. What's my positive negative gamma? Above 75. Let's see if we stay above 75. So let's go 75 by 70. So 60, 65, and 75, 70. If I go 10 wide on that, not a bad trade. Let's see if we can get $1.50 out of this 10 wide. I know I'm just playing around. I'm playing around with the numbers here, trying to get this fill. Let's try $1.45. Come on. All right, what do we have? What did you get filled on there? My trade filled. David 50, 69, 50, 55, 68, 55, and 60. Got filled for $1. Okay, you're 5 wide getting filled. I'm not getting filled yet. So I'm trying for a 15 wide. Those are quite a bit up there. I'm trying to get filled. See, this one is for waterfall. These are probably not going to fill without some pretty serious direction. I'm going to start from scratch here. Just trying to get this 10 wide filled if I can. All right, I'll try to get this one filled for $1.50. A little bit more direction. Here we go. Come on. We're right at the 50% ATR. 100% ATR 65. Man, good Lord. Come on. All right, I'm just gonna let it hang out. It's pending for $1.50. I'll play defense here. 55, 65, and 80. Try to play defense at a broken wing butterfly for $1. Put side 70, 60, 45. Play a little defense there as well. Come on, just give me a little nudge to the upside. 130, 135. A little bit more direction would hopefully get us filled at $1.50. All right. This is the only trade that I have running right now. This is the only pending order that I have. That's my daily profit play. Then I'm putting in some defense trades. Those are, trading for low credits right now. I'm just going to keep an eye on those. But it's in and around those strikes. So if we get a little bit of a nudge, higher, hopefully we get filled at $1.50. So I'm starting at 56 is what we called for the measure move today. 60, 70 is my daily profit play. So, gosh, it won't fill me at $1.50. If I go 60, 75, and 75, 60, 15 wide. No, I'm just making my strikes messy. 630 iron condors. Are you talking about the put condors? Those aren't iron condors, David. Those are put condors. You talking about waterfall income? Yeah, I'll talk about that in just a sec. Yeah, we'll get to that in a little bit. So what's being referenced here is I mentioned this yesterday. Waterfall income stack strategy. I sent a video out to members. I'm looking at some like May, June expirations, stacking levels 10, 15, and 20% lower. We're going after like a $2 to $2.50 credit. Risk is a little bit higher depending on the strikes. I mean, if I can keep the risk under, I'd like to risk less than about $1,500. That should give me the reward profile that I want. So if I have $200, risking a max of $1,500, that's 13% return, which is pretty mechanical for my strategy too. But I'm also building out like a $2,500 profit trap. So the way that strategy works is if price is falling and price is down up to 5% or 10%, we don't really have any risk unless price is way beyond that. We'd have to have price fall 11, 12, 13% and stay there. So anyway, I'm putting in some pending orders at the 10, 15, 20% stacked levels. Because the strikes are a little bit wider, I don't have the precision if I'm going out like 60, 90 days. So some of the trades, it was like a 10 wide minimum or a 25 wide strike minimum. That makes the risk a little bit greater. I had one trade where I think the risk was like $2,200, but I'm going after $250 to $3 credit. So it'd be $250 to $3 credit, and it gives me a $25 profit trap. Again, at the 10 and 15 and 20% levels. So for the market to fall there and stay there is going to be pretty difficult. So I'm stacking up some of those trades. Yep. So that video is posted in your classroom yesterday. So waterfall income, look in your alert section, and it should also be posted inside of the masterclass and trainings. Let me see if the team put it in there. Let's go waterfall. Okay. So this is inside the classroom. So waterfall income inside your alerts. Video posted yesterday here, new resource available. And there's a video review. So the stack strategy, check that video out for members, is about 11 minutes. I'm going to see if they actually posted the video inside the masterclass and trainings. There you go. So right there, 12 minutes, waterfall income stack strategy video, February 24th. So it's in your masterclass and live sessions, time stamped for yesterday. Cool. All right. So for my 10 wide, I mean, I can settle for $1.25, $1.30. I mean, price is going a little bit higher. I want $1.50. I mean, I think the levels are pretty safe. 60 by 70. I've got 100% ATR around the 65 handle. What's my VIX box high? Around 70. My broken wing, 60. So what's our call side? It'd be a break even around 75. So I mean, 65 to 70 is a profit trap. All right, we're getting closer. Now it's up for $1.40. Let me see what a 65, 75. $70, $60. No, those are so bad. Fudge muffin. All right, let me see if I can get. I'm gonna go down a little bit. Let's see if we can get filled for $1.45. $1.40 should fill. Come on. $60 by 70. Come on. That's crazy, man. I can't believe we have to like chase this thing down like this. I'm still trying. I'm still working on it. So I'm trying to keep my strikes above this expected move. That's with the gap and everything. Look at that. That thing just slipped like a quick 20 cents lower. F&A cotton. I'm going to go $1.50 again. Let's keep an eye on this. Okay, Ernesto, 69.60, 68.65 for $1.50, 15 wide. Okay, good. I'll keep an eye on this one. I'll put it in for, I mean, if I'm really going to like pick my level, so I want that broken. I can always put the broken wings in after the fact. I'm trying to get filled in just like the core daily profit play. So let's get the broken wings in a second so I don't overlap my strikes. So I'm trying for the 60 by 70. Let me see if I did 65 by 80. 65 by 80. And let's match that with a 10 delta. So even 15 wide is only offering $1. Good Lord. That's so little credit. Should be a very safe trade, but that's right at the positive negative gamma pivot point. Gap fill would be around 68.90. Hmm. But I mean, honestly, neither one are filling. So let's try taking on a bit more risk if I get filled here. $1.10, 15 wide. Come on. All right, I'm going to go $1.05, 15 wide and take the fill of it. All right, so I'm in. All right, new trade. I'm going 15 wide, slightly higher, slightly lower. New trade. I'm just posting this here. So DPEP update. This is my trade for the day. SPX 225. Sell not the 69.65, 69.80, 68.75, 68.60, $1.05 credit. Ugh. So I am canceling. This trade was not filling. So switching to 15 wide and higher, lower strikes. All right, this is the trade that I'm in for $1.05, $1.05. So it's filled. It's $13.95 a risk. Now I can sprinkle in a broken wing defense trade. I can go 60, 70, 85. Sprinkle that in for any type of credit that I can get today. 50 cents to $1 would be totally fine. I mean, I'd take it at 50 cents, to be honest. Just because my break even will be so high, so it gives me a profit trap. Let's go. I mean, even my VIX box is up here towards like 70. So that would be my break even. I'm going to put in $1 credit. And down here, I will go, let's see. In case the VIX gets a little bit wilder, I'm going to go 65, 55, 40. So $1 credit. What? Buy. There we go. Buy, sell, buy. So one there for $1. And buy, sell, buy for $1. All right. Couple of defense trades. So there's my DPP for the day, 105. It's going to try to let this one just get down to like maybe 30 cents, 20 cents debit. I'd be happy. I'd be happy that, 20 cents debit or less would be great. Okay. So what are the strikes that we're in, everybody? I've got a filled order here, 65 by 80 on the call side. That's 69, 65, 69, 80 on the call side. Put side 68, 75, 68, 60. So it is on the gamma levels. As long as we stay above positive gamma, we should be in good shape there. 75 by 60, and that is at 675. So as long as we stay above positive gamma, we should be in good shape. Getting above 6,900 is a good thing. Positive gamma should be lighting up all day. So it's positive gamma flows today, which is a good thing. We got 69.75 for tomorrow expiration. Because of that gap up, we kind of, rallied into all of this positive gamma. I mean, it could be one of those days where the market just gaps up and just hangs out all day versus really going much higher directionally. So let's keep an eye on it. So 65 by 80 call side. All right, we'll see what happens. So we got something going for the day. So I've got measured move around 56, and my strike is a 65. So 65. And my put side, I'm up a little bit higher at the 75, which is that positive negative gamma. That's the only thing that I don't love. So usually when we look at our kind of daily setup is I've got my, blue line. Typically I have the blue lines inside of my green lines, but today, just because of that gap up, my strikes are, I mean, you can still see like I'm quite a bit away from current price, but we'll see. Hopefully price doesn't, make an aggressive attempt to gap fill or try to find that positive negative gamma pivot. Like to see price just kind of chillax and hang out here just above 6,900 for the day. Yep, I'll post the broken wing profit traps. I'll post those in Telegram for you. Yep, just give me a second. So working orders, I'm going to do SPX defense trades. So the call side is 69.60, 69.70, 69.85. And then put side 65, 55, and 40. Okay, it's in there for daily profit play. Joanne, what are your strikes? So give me some strikes. Where are we at? So even when I was trying to get filled at like the 5 wide or the 10 wide, those trades are still mechanically very good. If you got the 5 wide, like 55 by 60 for $1, that trade is still very good. If you went 10 wide and got, I mean, just give me some levels so I can kind of monitor them for you. So my green lines are represented where I have my call strike here and my put strike here. That's where I'm at for the day. So as long as our expected move is going to be, less than that, like we get paid, this is for $1.05. Look, I'm not thrilled about this. Like I'm risking $13.95 to make $1.05, but I mean, they were all single digit deltas, so I should have like a 90+% chance of profit on these trades. 55 and 60. So is that where your call side was? 69.55 by 69.60. What about your put side? Were they the same? 68.55, 68.50? Or is it a little bit higher? Either way, it's like, you know what to do, right? Where are your strikes? Set them on your charts. Set some chart alarms. You're in the trade. We manage risk. We manage profit. That's the trade, right? Gloria says, I got the 10 wide for $1.35. Okay, what's your strike? Was it the 69.60 by 70? I mean, I tried that 10 wide. I mean, it is what it is. Like, I'm mechanically, it's like, yes, I'm taking on more risk. Hopefully, it's safe levels for the day. Obviously, in both sides, but the day is just getting started. We're 30 minutes into the open. We got to trade in, so that's important. Like, I didn't want to not participate because it just strikes me as one of those days where it's going to be like a slow kind of positive gamma type, like either a drift day, or it's going to be like the market gaps up and it just hangs out, and then Nvidia is the all or nothing, whether or not the market gets kind of its permission to tap 7,000 again, or we just quickly come back and smash this gap. Nvidia could take us up into the highs. Real question is, are we going to sustain that? Right? I mean, would anybody be super surprised if the market's up here towards 7,000 only to see it go right back down? I don't think the State of the Union last night was enough reassurance to say we're going to 7,000 plus. Um, Especially coming into like same thing. It's like February, March, April. I mean, if the market's going to have a bit of a pullback, this is the window to do it. So we'll see what happens. Okay. Okay, Buck, you went reverse iron condor. So 2025, and then 35 and 40. I mean, that seems pretty good. So you just need price to be above 69.40. Is that right? Let me put that in. See if I can read that properly, Buck. So 69.20.25. So 20.25 on the call spread. 35 and 40. So it'd be a 40.35, right? I see. Yeah, I mean that is a good fill. I mean the market's ability to get up to 69.50 today is possible. And then we have room all the way down to 68.75 for that positive and negative gamma pivot. So I mean, you're positioned for just a little bit of direction. I mean, look, it's a good setup. If you're in for a buck 15, you're risking 385 to make $1.15. I mean, it's a good fill. Um, do we get direction today? I mean, what if we have a gap fill? Gap fills at 68.90. If we fill the gap at 68.90, you're getting paid, right? So, I mean, you're in. You took the trade. You know the risk. You know where price has to be. You need price to be less than 69.20 or greater than 69.40 for a buck 15. I mean, you could do the same thing, Roy. You could do day, good for the day, good till cancel. Doesn't matter. I'm just so used to GTC. It's like it's a 0 day. Okay. Yeah. I mean, Buck, I like the trade. It's fine. I mean, you've got certainly more room to the. I'd say you've got more room to the downside as far as like finding price outside of your reverse iron condor. Upside, I would say, is a little bit limited. Like the 69.50 to 60 is probably the upside. Hopefully, the upside kind of cap today, because I still did like a pretty low delta on my 15 wide. So anyway, we'll see what happens. Gloria 10 wide, 65.75, 60 and 70. Put side, you did 70 by 60 for $1.35. That's good. I mean, heck, you're 10 wide getting a better fill than I did. $1.35. That's good. So yeah, looking good. Okay. Good stuff. So green lines represent my trades. So I need price to stay below this. I need price to stay above this. I do have a broken wing butterfly that's sprinkled in around it in case that offers up some additional defense. Primarily, that defense is going to help me mostly on the put side than it is the call side. Butterfly, like the broken wing butterfly calls, are difficult to get filled unless price is like trading at or in the money. Then it can get filled. Calls are tough though, because we usually don't see like aggressive upside risk. We see much more like yesterday, for example. Well, I guess Monday, right? Monday's slide, we got filled on defense, and that ended up giving us about $820, $825 of defense, which was nice. So I think the way I did the math on Monday's close was the daily profit play would have lost 75 cents. The defense trade would have made 825. You walk away, $750 positive. Not too bad. Yesterday we got out pretty quickly. Big volatility here. We pulled the $1.60 in the morning. Price went up for the rest of the day, and it closed right at our expected move. We would have been selling above that anyway, so even holding it to expiration would have been pretty solid. Yeah, but it's always like that, Pete. I mean, NQ is always going to move more than ES. But this is probably a bit of the software space catching a bid, right? Q's up 125, S&P up 0.5%. Nasdaq's getting a big jump. We got some software stuff probably bumping today. So look at IGV. IGV's up 2.5%. I mean, some of those beat up stocks, you're catching a bid here. And again, I think if anything, this is short term. I think this is short term. If that pops up, great. I don't think this is a generational lifetime opportunity to buy software. I think that disruption is not going away. I think the uncertainty is, to me, not worth holding anything long term. But if you're going IGV to catch a bid, not a bad trade. One thing I'm going to look at this could be a big, ugly fake out for Friday, but let me check something here. We've got lows around 76. Let me look at IGV. I guess I could do this on individual stock too, but IGV, go out to February. So we've got lows around 76 here. Could I get a buy 77, 76, something like that? It's going to offer me like little to no credit. So I get a $100 profit trap, take on a bit of risk. I mean, 4 cents credit, no thank you. Probably have to go to individual stocks. Let me see what IGV holdings are. Microsoft, Big Weight, Palantir, Oracle, CRM. All right, let's take a look at those top few holdings. Okay, let's do a little dive in it. And again, these are short-term opportunities, if you ask me. Microsoft, if it's catching a bid, take a quick screenshot of these like top, 20, I guess. All right, park that's over here. Do we get a short-term bid? Let's go Microsoft. Microsoft catching a bit of a bid here. I did not get filled on that broken wing. I mean, not yet. Like it might still fill. I'll let that hang out. Palantir. Again, short term, maybe catching a bit of a bid. I mean, a bull. Here, let me see if this is cheap. Maybe going into tomorrow. Microsoft. Recent lows at 382. Go into Friday. Are we up that much already? 397. I kind of want to put a trap in there around like 382. If I buy, sell, buy. Gosh, these credits are garbage, man. I mean, I could put a trade. It's like it's not the credit like I don't like this trade. I mean, I'm not going to take the trade for 3 cents credit, pay the fees, and get nothing for it. Maybe have a profit trap if I'm lucky at the lows. It doesn't cost me anything to take that trade. I'm still risking 250 to make 250, but that's all in the profit trap. If I go a little bit wider, like that trade to me is not worth it. Grab 10 cents. Now I'm risking more than my profit. This one's not awful for kind of like a free profit trap, essentially, is what it is. Um, I don't know. It's probably not that great. It's a free profit trap. So I mean, it's a 1-to-1 profit trap trade. Now it's a butterfly. Now you're taking 20. I mean, now you can make more, but price would have to fall back into it. If price stays above, you don't have any profit. So I'd want to do that broken wing structure. Could I get filled for a 5 cent credit? Basically, have a free trap by Friday. That's coming back into the lows. Let's see if this will fill for 5 cents. 4 cents. Okay, interesting play here. I don't know. This is a weird play. So I just got filled for 4 cents on Microsoft. What I'm doing here is we just caught a bid. We just caught a bid off like the 382 lows. Everybody see that? So what I'm building is a very short and sweet butterfly, broken wing butterfly, where there's no upside risk. Okay. And there is a profit trap that is right back at the lows. And then there's a tiny bit of risk here. So I'm risking 250 to make 4 cents, which is not what I'm excited about. But if this falls back into this low, there's a $250 profit trap. That's potentially what I'm looking at. Okay. I don't know if I really like this trade. It doesn't cost me anything. I have no upside risk. Obviously, if price goes higher, I'm going to make 4 cents, which is essentially after fees, probably $2. So that's not the reason I'm taking the trade. I'm taking the trade just in case this bid is short lived and the market's going to come back and retest the recent low. And I want to see if I can catch that by Friday. So when I say caught a bid, I mean that, a lot of times you're looking to buy. I mean, the market's like catching a bid is in like there's a level that the market's buying. Does that make sense? So the market clearly has turned a little bit here at the 382 handle. And from that, market's up about $16. So this low is around, let me look at that exact candle. That low is 381.71. Okay. So I have a $250 profit trap on Microsoft, and it's essentially a free hedge at the lows. It's 1-to-1, but let's go broken wing butterfly. And it's a trap only just because I'm not really getting any money on the $4 credit. I'm getting money if we come back to revisit the 383, 382, 380, 381.50 zone. Then I can pull maybe a couple $100. If price goes up to 400 plus, this trade it doesn't cost me anything necessarily. It's just a $2 winner. So I'm not that excited about it. But I'm not going to jump in here and say like, well, I'll buy the 397 to 400. It's like I don't know how strong the bid is. Meaning like I don't know how strong these flows are right now. We can look and see if anything's coming in real time. If I go into Microsoft right now, the 25th, it's like we're getting March flows coming in pretty hot. I'm getting some. I mean, there's 400K in premium coming in the March 26th, but that's a month. It's like I mean, monthly flows. Yeah, sure. Catch a bid, right? I think there's a short-term recovery there. But again, I still like the trades that we posted earlier, which was risking. What was it? Risking 4 to make 1, but also have a $1,000 profit trap. Right? I have those pending orders on Microsoft working. So yeah, the 60, 50, and 35, that's a broken wing butterfly. 310, 300, 285 broken wing butterfly. Those are still pending orders. Those are out to May. I'm looking a little bit, bigger picture there. So we'll see. All right, what else with the holdings? So Palantir, maybe something similar on Palantir. Lows around 126. Look at Palantir. I might just put a couple of these traps in and see. Again, this is not a perfect trade by any stretch. 126 on Palantir. If it did like a 128, 126 by 123. Kind of the same structure as like putting in a profit trap. Maybe if this is a debit, showing a debit. Now it's about a 1-to-1. I'll try this one. Try 5 cents on Palantir, 4 cents on Palantir, 3 cents final offer. See if it's a free trade. Okay. I'll throw these in. I'll put these in Zoom. These are, I don't really know what I want to call these. They're broken wing structures. And basically I'm saying, look, here is the recent low that because of IGV looking to catch a bit of an upswing, if it's just getting started, this trade would pay me nothing to the upside. But if this is a head fake and the market comes right back down to the recent lows, this is a profit trap for Friday. Okay, so this could be worth $200 on a profit trap. That's Palantir and Microsoft. Oracle, take a look at this one as well. Oracle recent lows around 135. Earnings are next week. 135. That's crazy. That's quite a bit lower. 130. This low is 136. Let me find this exact candlestick. I've got a low at 135.25. So I'm going to use that 135 handle on Oracle. 137, 135 by 131. Okay. Try. So really what I'm doing is I'm putting in some free profit traps is essentially what it is. And I'll kind of monitor these through Thursday, Friday. Filled at 4 cents. Okay. So that's Oracle. CRM. CRM has earnings. So I want to be careful on that one. This one has earnings today after market. This is probably not the one that I want to be a hero on. However, because of the skew on this one, it should be. Let me read this one out as far as expected earnings. So CRM. So average move around 6.3%. You can see here we have some in the 10%. What's the broker showing us right now? Expected move going into Friday's expiration, 15.33 out of a 188.70 price. You got an 8% move expected by the broker. Let's see. A calendar spread seems reasonable. I just don't want to see like earnings like blow it out of the water and all of a sudden it's way up here recovering. Let's see. Expected move. I should just base this on the expected move. If we go 175.70 by 60. So what is that move there? If we drop 1750, that should be safe. Based on that expected move, that hopefully is safe. What's the recent low on CRM? Recent low around 175. Ooh, I kind of like that trade. All right, I'm going to take this trade for Friday. This is a little bit gutsier here. I'm not getting a lot of credit up front, but I'm putting in a profit trap. Okay, so this trade, oops, buy, sell, buy, and then two contracts there for 10 cents. So I'm trying to catch a profit trap at the lows, and it's worth 500 bucks. If we go to the upside, we should be. I mean, I don't get any money to the upside. I get 10 bucks to the upside. But if it comes back down to revisit the lows, lows are 175. Lows are 175, and I'm down here to 170 with a profit trap through earnings. Okay. We're going to see what happens here. I think I'm good. I don't want to start throwing in a bunch of these trades. I've got one on Microsoft, Palantir, Oracle, and CRM. I'm going to make these bonus trades if anybody wants to watch. These are essentially, they don't cost me anything to take the trade. I'm looking at a profit trap off of these recent lows that we've seen on the kind of the IGV, SaaSageddon, SaaS apocalypse, whatever you want to call it. So that way, if we come back down to revisit these lows, there's a profit trap going into Friday's trading day. Okay. Are these great trades? I mean, not for little credit up front. I mean, they'd be better if I was getting 50 cents to $1. That way there's at least some money to be made. If price does go up, I make money versus making like, $5. But the profit trap is, well, I'm giving myself some breathing room. So if we do have prices going up, if price is catching a bit of a bid here, like I said, and we're going to go higher here for a short-term recovery, then we've got a chance. But if it stalls and heads back down to the same lows again, that's roughly trading the expected move, which option prices are pretty efficient in that regard. We're trading something that has slightly higher IV. So if we have slightly higher IV and we're at the bottom end of that expected move, there's a chance that we, survive the trade, maybe even get a profit trap. If they fall further down, it's defined risk. So we'd have to, here's what has to happen. CRM would have to go down below the lows for me to take on risk. Okay, Microsoft would have to fall down below the lows for me to take on risk. Palantir would have to fall down below the lows for me to take on risk. Is there risk in all these trades? Yes. It's a 1-to-1. Based on my profit trap, it's essentially a 1-to-1. But we'd have to fall to fresh lows. We'd have to fall to fresh lows. And I don't know if that's going to happen by Friday. That's all I'm saying. If Nvidia has below earnings, I mean, if Nvidia is up through tomorrow's earnings, so if we beat earnings today and the market's up tomorrow, I bet all those trades will be up. Okay. Question, of course, is will it be up going into Thursday morning's trading? The question is it going to stay up, or is it going to be gap up on Nvidia earnings? Everyone's all excited. Is this a renewed buy that the whole market catches a bid by Thursday if Nvidia's up, right? I said this in that little unfiltered finance segment. I just said that, look, Nvidia could be the, permission for the market to buy everything and kind of get risk appetite flowing again, or it's like the short-term nail in the coffin to continue to deleverage. Like, I think that's what Nvidia is going to be. It's a big deal. Obviously, we know a company that has, 5 to 6% concentration in the entire S&P. It's like it will move the market. So, I mean, I would imagine that Nvidia earnings are still going to beat probably top and bottom. Their guidance, I mean, Jensen Huang is a very optimistic CEO, but that didn't stop the market from having a 3 standard deviation move on whatever day that was, November 20th. That was like a Wednesday or Thursday intraday. Like, that was a wild swing for the day. Okay. So let me do this. I'm going to label these trades out. So Microsoft, I'm doing the trap only. I put one on Palantir. So this is BWB trap only. And Oracle. Porky Pig. BWB trap only. And CRM. Okay. So I'm giving myself an opportunity to have some butterfly traps. These are broken wings. I'm doing broken wing structure so it doesn't cost me anything, right? If I do a butterfly, I need price to be inside my strikes. If I do a broken wing, I'm playing the recent lows. If price wants to fall back and revisit those lows, this one offers a $500 profit trap. Oracle offers a $200 profit trap. Palantir offers a $200 profit trap, and Microsoft offers a $250 profit trap. Okay, so I'll post them right now. I'm going to post, actually, I'll post them in Telegram. So I'll post these as bonus trades. Let's see if I can, I've got an image here somewhere for bonus trades, I believe. One of my many thumbnails that I built. Core strategy, win the day, full winner, new trade, profit traps, live trading, trade updates, bonus trades. Okay. Software catching a small bid Wednesday. Looking at IGV top holdings and playing some one-to-one traps at recent lows on the following tickers: Microsoft, Palantir, Oracle, CRM. Bonus trades, if you want them. I'll manage by Thursday near close or Friday during the day. So Microsoft. Actually, I'll do that. I'll go in alphabetical order. CRM is a 227 expiration. I'll just type them in the chat. Everybody can you see me typing this in right here? So 227 expiration. I'm buying the 175 put, selling the 170 put, and buying the 160 put. I got filled for 10 cents credit. Filled. So if CRM is 161 to 174, that's a profit trap. Okay. Actually, that's incorrect. That'd be 160. It'd have to be down to 166. So let's see, 175. Yeah, so 165. I get the 166 is a profit trap. 166 to 174 is profit trap. Okay, next we have Microsoft. Microsoft 227 expiration. Buy the 385. Sell the 38250 and buy the 37750. 0.05 credit. And then if Microsoft is 384 to 381. I mean, it could be all the way down to like 380 plus. I mean, I'll put 380.50. It's like we at least have a profit trap there. That's a profit trap. Then we have Oracle. 227 expiration. Buy the 137 put. Sell the 135 put. Buy the 131 put. That filled for 5 cents credit. If Oracle is 136 to 130, it's $2 wide, so I want like that 136 to 133 zone. It'd be 132.50, I guess. That's a profit trap. And Palantir, 227 expiration by the 127. Sell the 125 by the 121. 3 cents credit. If Palantir is 126.50 to 124.50, that's a profit trap. Okay. So pretty I mean, obviously I'd like to say these trades would be better if I was getting like, 50 cents credit on the upfront broken wing butterfly. But the trade-off is, and this is what I always think with every option trade you build, there is a trade-off. Okay. My trade-off is I'm using the recent lows to make money. If the market is going to drive these things higher, there's essentially no risk on these trades. Okay. But if this is a short-lived pop and the market comes right back down to the lows, which are all around the current expected moves, then we have a $200 profit trap here. Okay. We have a $200 profit trap here on CRM. I'm sorry, no, that's $500. We have $500 profit trap on CRM. We have a $250 profit trap on Microsoft, a $200 profit trap on Oracle, and a $200 profit trap on Palantir. So if we come back to revisit any of the recent lows within the last couple of days or the last week or two, I mean, that's where our profit is going to be sitting. So if I'm showing any reasonable profit in these trades, I'm taking it. And whether that's Thursday near the close or Friday into the open, I don't really care. But if we've got, what is that, 400, 900, we got $1,150 up for grabs. Okay. So and it's 1-to-1. I mean, essentially, I'm risking this much too if I'm dead wrong. But what does price have to do to all these trades? Price would have to drop on all of them below the recent lows. Okay. So again, this is why I'm saying like use the expected move. Let's look at all those trades. Look at CRM. Look at the option chain. Can everybody see that my strike is below the expected move? Yes or no? Okay. Is there risk? Yes, there's risk, but it's below the expected move. Let's go to Microsoft. Is it below the expected move? Yes. If I go to Palantir, or I guess Oracle, I'll go in alphabetical order. Oracle, it's way below the expected move. If I go to Palantir, is it below the expected move? Yes. So price would have to do something pretty out of the ordinary for our trades to really have the risk that would come with those trades. Type in a wire yes if that makes sense. Okay. So I'm just not, look, I'm not chasing IGV, right? I'm not chasing software because all it takes is today's a bid day and today prices are driven up. And then tomorrow and Friday, they're driven right back down to these recent lows. But again, all this stuff is taken into consideration. This is an efficient market. So we are outside the expected move on every one of them, which means something out of the ordinary has to happen. I mean, if price wants to move down to this expected move, we have a profit trap there that we can manage. On Oracle, we have a profit trap down here that we can manage. On Microsoft, we have a profit trap that we can manage. Okay. CRM, this one has earnings, so maybe a bit more volatile, but still, we have a profit trap we can manage. So I say, let's see what happens. So I'm like I said, I'm not excited about the tiny little credits that I've got up front, but essentially this is a free way for me to play the bottoms of all these software stocks and see, is this really going to catch a strong enough bid to go higher? Because if price goes up on CRM, goes up on Microsoft, on Oracle, I'm not really making any money here. I'm going to make maybe $20. Okay. But it doesn't cost me anything to take that trade and kind of safely play the lows of the expected move. Okay. So if I'm dead wrong, then I'm taking on about $500 risk here and about $250 risk here. and $200 here and $200 here. And we'd have to have every one of them drop below the expected move and through our profit trap. By the way, that broken wing structure is also giving us a bit more breathing room. So again, I don't know how this is going to play out. I would say if the market is going to be up on NVIDIA news and stay up on NVIDIA news, then we'll walk away with, $10, $15, $20 profit. Not that exciting. But if any of these revisit an expected move low, our profit trap is sitting right there. And that's really what I'm going to watch. Okay, that's what I'm going to watch for. Okay. All right. We'll see what happens there. And then on daily profit play for today, that $1.05 is up $20. Not super exciting. Markets really haven't moved much at all. It's been 60 minutes. I'm going to see what happens if we're just kind of chilling. Right now price is pretty calm. We're just hanging out. Okay, fine. Could just hang out right in here. So I'm going to try the $1.05. I'm going to try to get like $50 or better. So if I get a debit in at like 55 cents or 50 cents or lower, that's probably where I'm going to take some profit. I'll just share the link for you, Roy. So this is my public Telegram. So I'll just share the link if you want it. No, don't take it for a debit. Don't take it for a debit. I put those all in for broken wing butterflies. Make sure you check your strikes. If you put them in how I have them here, let's go back to this. So it's a buy one, sell two, buy one. These should all be filling for credit. So 5 cents credit, 3 cents credit, 10 cents credit. They should all be filling for a credit. Don't fill them for a debit because that means you're taking on risk. That way, if price goes up, you're still eating 9 cents, right? If you get filled for a 5 cent credit, it's essentially a free broken wing butterfly. If price goes up, you're going to make $5, $4, $3. But don't fill these for debits. I want these all to be filled as credits, even if they're tiny. Okay. So just for fun. But let's see what happens. Like I said, the expectation is that price will stay above all of these levels, and we're going to walk away with like $15, $20 profit. Meh, whatever. But if it's a short-term bid today, and then the market comes back down to revisit those lows, that comes right into our profit trap on Friday, which could make things pretty exciting. Okay. So we'll see where those bonus traps need to be managed on Friday. Thursday afternoon or Friday. Obviously, with markets having NVIDIA earnings today, we'll be trading that Thursday, see what the price action is going to do. And then, near the end of the day, are we back into profit trap zones? Let's have a look at one of these, by the way. Let's look at CRM. Let's build it out in option strat. Okay, let's build out the physical side of this. So we're doing a broken wing. I'll just do a put butterfly here on CRM and posted it in Telegram. So 175. So I'm buying the 175, selling the 170, and then buying the 160. So this is CRM or a Salesforce. This is current price. I got filled in this thing for a whopping, 10 cents? I'm not excited about 10 cents. Okay. So if CRM goes up, I'm just going to keep 10 cents. But what I want to look at is as we go into, I'm going to look at Thursday, end of the day. Let's look at Thursday around 4 p.m. So going into the close on Thursday, if price is a little bit lower, we have a bit of that profit trap. This is probably going to be best for us to be managing these trades on Friday morning or Friday during the day. Friday morning at 9:30 a.m., look at the difference in that risk profile. If we're opening bell Friday and we're anywhere near our broken wing traps, which again are on the expected move low side, okay? So based on some market efficiency, if we're at the expected move to the downside, we're going to see some profit traps, aren't we? So by 9:30 in the morning, my CRM trade, if we're hanging out around like 170, let's say 178, 177, we could see, $90 a profit. I might just take it. If we're like inside of the trap, I mean, it's going to be difficult to know exactly how it's going to look on Friday morning. But if we have a profit trap here of $100, I'm going to take it. So net on the day, it's like if all these trades are showing any profit, $50 to $100 across the board, 50, 50, 50, 50, I'll take it. Take $200 out of the trades, right? 100. I mean, the best profit opportunity is going to be this one because we have a $5 profit trap. This one's 250. This one's 2. So if I could expect to make maybe $100 here, cut that in half, I can make 50 here, make maybe 30 to 50 here. This is early management on Friday. That's what I'm saying. So across the board, we could, maybe squeak in $200, $250, maybe. I'd still take the profit. Where the trade gets better is near the end of the day. So this is opening bell Friday. Let's go to like noon. Okay. By noon Friday, if we're anywhere in these profit trap zones, we'll have some profit. Not bad. Okay. I mean, we know this. I've said this many times in the butterfly stuff, broken wings or standard butterflies. All the magic happens in the afternoons, the day of expiration. Here's 2 o'clock. Here's 3 o'clock. Look at 3 o'clock. Oh, baby. If we're back to those expected move lows by 3 p.m. on Friday, we're going to have some profit traps to manage. And that's why I'm taking the trades, because if we're up, there's nothing to do. If price is up, there's nothing to do. If price is down towards the expected move and inside that profit trap later in the day on Friday in that final hour, that can make Friday's end of the day pretty exciting. Okay, especially if the trades don't necessarily cost us anything. We essentially have like a free profit trap. Is there risk? Yes, but we'd have to have prices go all lower than these recent lows we just saw. All of them. I think the odds of that happening are pretty low. Could have happened, of course, and I embrace that risk, but it's not probable. Okay. So if I put this, let me go to CRM and actually post this trade. Let me look at this one again. CRM filled. I mean, right now there's about a 90% chance of profit this trade holds. So, I mean, essentially we'd have to have like an outlier type move, like only 10% of the time would this market be giving us any risk. So I'm kind of like, well, let's see if we can get a free profit trap out of it. That makes sense? So we'll see what happens. It could be, I mean, it could be nothing. We could just make $10, $15, $20 on the trades and no profit traps and okay, fine. But if we land a profit trap or two, that'd be great. 2 out of 4 is not bad. 1 out of 4 is not bad. As long as I take these trades and I make some money, I'd be happy. Right? And if price is just bid and it's going up, I mean, what I'm going to enjoy is the fact that my entire portfolio is going to be creeping back up to year-to-date highs. My year-to-date highs were like $108,000. And obviously the market's been, highs and lows and volatility and roller coaster rides and volatility. So I'm trying to get my year-to-date up as, obviously as high as I can. So I'll continue to grind my little face off. Cool. All right. Any other thoughts, questions for today? So we got some bonus trades in there. Let's see. I want to talk about some waterfall really quickly. And just in the context of the S&P, I mean, it's going to be a really interesting read for Thursday, Friday, depending on this box, right? If NVIDIA pushes this up right here, mean, you have to remember this candle was Nvidia back in November. That was November 20th. So the market was stoked that Nvidia beat earnings, and it got smashed down. It was a 3% swing intraday. I'm not going to say I'd be surprised to see that happen if the market's up here at 7,000. It's just such a stern, like it's such a firm call wall or such a firm resistance level that it's just everyone is just selling calls like crazy, or I mean, I guess buying puts, and it just lights up the downside. But I don't know. I don't know. We're right in the middle. Yeah, we're right in the middle. So it is the market's price action to decide like where do we go. I do know that if we break higher, I wouldn't necessarily call the top. If this thing on a daily candle breaks above here or on the weekly close breaks above here, I wouldn't be calling the top because that breakout move is just simple technicals. So if we run right up into 7,000 and we reject that on Friday or Thursday, Friday, like we just have to be paying attention to these prices. That is all. So I will look, we'll do this together. I'll obviously try to figure out what I can figure out and see if there's a good looking trade. Okay. Where are we at for daily profit play? Daily profit play for the day is now about $60. Okay. Not bad. We'll hang out there. I'll like I said, I don't mind putting the debit in around like 50 cents or lower. I mean, realistically, if I'm going to be a little bit greedy, I'd like to see, maybe 30 cents, 25 cents or less. Try to grab like 70, $80 out of that 105. Did we close? Not yet. I mean, HPQ, are we up on that one? It's down 7. I mean, we have out until March. Like, there's no rush on that trade. Let's just see if price moves. So I'm still in it. I've had no targets hit on pinch points. Yeah, that's good. We want an earnings play. We want there to be some direction, right? So I want to see if HPQ can get us to an expected move. Like, let's hit 20, 21, $22. Let's hit 15, $14. I don't care. Just go somewhere. We have a profit target already sitting. So if we have a decent move on earnings, I don't show an earnings today, actually, unless we already had it. So we had earnings. So we'll see if there's some follow through now. Yeah, we'll see. So if it slides lower below 1750, I'll set a chart alarm here. Or if it breaks above maybe 20, see if we can catch a bid. Just trying to get to that expected move. That's all. Is it unwise to hold the daily profit play? Not necessarily. I mean, today, based on the levels that I have here, here's why I'm not really stoked about holding daily profit play to the end of the day. If this was, let me draw this out. So if I set up my trade where the blue line will represent the expected move. Okay, let's go up into some white space. So let's say that price opens up right here. So price opens up right here. And the expected move in blue is we measure out our expected move on the plus side, expected move on the downside. So this is our plus and this is our minus of the day. Does that make sense? So what I would be willing to do when I want to hold these a little bit longer or hold them, even consider holding them to the close is if my levels are, I'm selling calls up here and I'm selling puts down here, I'm more inclined to hold it throughout the day. Okay. So that gives the market makers the entire day to kind of stay within the context of the plus minus move, the expected move, keep things efficient. And I'm outside of those efficiencies with a credit that I'm happy with. Okay. By the way, like I never mind like a 10-cent debit or a 5-cent debit on SPX. So even today at $1.05, if I close that thing for 10 cents, or 5 cents or 15 cents, I'm still pretty happy with that as a net result. Today, my trade doesn't look like this, right? Today, my trade looks like this. My trade is we have price. I have my blue line. This is my expected move, my plus minus, right? So this is my plus side of the move. This is my minus. And the way the option chain worked this morning, because of the gap, I have my call side higher, but my put side higher, right? So that means that if the market's going in, it shouldn't do this today. It should not do this. But if the market wanted to come down to test the minus side of the expected move, my daily profit play is at risk, more so than if it was outside of the expected move. Does that make sense? So today, for my $1.05, which was, I mean, I'm 15 wide on $1.05. I'm not super stoked about that trade, but I'm safely above, and markets obviously haven't gone much of anywhere today. So my goal is to take that down to maybe 50 cents or less. Or less. And that's a safe trade. You know, if I'm getting greedy, I'm taking it down to like 15 cents. I'm taking it down to 10 cents, and I'm going to sit on it through most of the day. You know, that makes me a bit more dollars on the day, but to me, it's like, it's not worth the potential risk of having a 15 wide that is higher than the expected move. So, like I said, probably the safe thing is for me just to take the profit and move on. You know, it's not a loss. I'm up $50. I'll watch this one and see, you know, maybe by 11:30 or 12, maybe it's up, you know, 60, $70. So right now the expected move, I mean, this is the expected move for the day. Things are pretty darn quiet. That's the expected move. These are my puts. They should be safe. There's a 92% chance that my trade is safe today. There's a 98% chance that my trade is safe today on the call side. So, I mean, probability-wise, those are pretty high. That we just hang in there for the day. We have a high probability of profit that I don't have to manage anything. So, you know, if I see that and I want to stick to my you know, house edge of what the option market shows right now, then I'll hang on to this a little bit longer and see if I can grab, you know, more profit out of that $1.05. Okay. All right. Before we go, I want to talk a little bit more SPX, and I want to talk about that stack waterfall. If you are a member of Daily Profit Play, go into your classroom and watch. So I posted it as an alert yesterday. It's like a new resource available, just new alert. If you go into masterclass and live sessions, it's all the way down at the bottom, timestamp for February 24th. It's called the Waterfall Stack Strategy. I did a video yesterday. I was excited. I had my new laptop yesterday, so I was upstairs in the living space. You might have heard some background noise. That was my kid just crawling around and throwing pots and pans. But anyway, the trade was, I'm looking at stacking up some monthly expirations. And if we have price, right here, I'm going down 10%. I'm going down 15%, and I'm going down 20%. And I'm putting in a trade. I'm building out a strategy too with my waterfall trades. I'm stacking them here. I'm stacking them here. I'm stacking them here. The only reason I'm doing that is because I still have this like weird uncertainty that this market's going to have some type of flush lower. Okay. Now, to be fair, I think the market could still grind higher first before we start to roll over. Okay. So I'm still like cautiously bullish. And if price goes higher, all the trades we have in right now are going to be offering some profit. And it's also going to make it harder for the market to come all the way back down to those percentages we've already been playing. If we used the 10% buffer in here, every trade we've taken like 10% lower, 10% lower, 10% lower, 10% lower, 10% lower. So if we're going up and we go 10% lower, it's going to be slightly higher. But also to find this set of trades, we might have to go, 12%, 13%, 14%. In fact, I'm curious. I need more cowbell. Nice. If we break these highs and hit to the measured move here, that's a 3% rally, by the way. So if we break these highs and hit the expected move, this is just a measured like 100% breakout. That'd be a 3.29% move, which guess what? That makes all of our current trades of waterfall income strategy 2. The market has to fall 13 plus percent. It'd have to fall 13 plus percent. Again, very difficult for the market to do that without having, catching a bid essentially. So anyway, check out the video. Let me know what you think. It is more risk. I mean, week to week, we've been doing a lot of trades where I'm taking like 4 to 450 risk, and so that's much tighter. But for that one, I'm doing this for some of my larger managed accounts because I'm taking essentially half a percent risk. And even if I was averaging, I don't know, if I'm averaging $200 a week, and I do this 50 weeks out of the year, it's like that's a pretty safe 10K. You know, and 10K is not like crushing it for me. It's like 10K on a client account that's a 250K account. I mean, I'm making 4% without taking on really I mean, there's margin for error. Now this isn't landing any profit traps. This is just like standard income. If I land a profit trap, we have, I mean, every profit trap's like $1,000. So I mean, we could have $1,000 profit trap. We could have a $15, $20 profit trap. But again, I'm not banking on those. I'm like, just what's the income side? So point is, with the trades, every trade that I set up with waterfall, this is WFS2, that's strategy 2. I'm looking at about 11.1% return, ROR, return on risk. 11%. Now that's not anything to get excited about, but 11% return on risk has about a 98% chance of profit. Okay. And I have a profit trap on these trades that offers about a 2.3 to 1. So if we land a profit trap, we actually have bigger reward. Okay. We have bigger reward than risk if we land a profit trap. So I'm building these trades up. My return is about 11%. I'm trying to go slightly higher if I can, depends on how the thing sets up, but it's going to be between about 11 and 15% return on risk with just the standard credit. If we get a profit trap landed, now we can get like a 2 to 1 or 2.5 to 1, which is fine. Makes up for some losses. Okay. And again, rarely, I mean, in a 98% win rate or 97% win rate, very rarely are we taking losses. Something outliers would have to happen for us to take losses. So we will continue to build. All right. So if you want to check that out, go into your classroom, check it out in your alert section or at the bottom of your masterclass and live sessions. You'll see it. Cool. All right. Any thoughts, any questions for today? Okay, catch him on some stuff here. Turning points, good. Okay. I think we're good. Any questions for today? Is it too late to put the daily profit play in that expire the 27th? We didn't put one in, Chuck. I don't have a daily profit play that expires the 27th. What trade are you talking about? I don't have a daily profit play that expires Friday. I have those bonus trades that are just kind of software related off the recent lows. The trades on the video last night was just for reference. No, I did place them. They're in my trades. I told you I'm doing for managed accounts. So here's an example. Just one of my accounts. Take a look at all these working orders. SPX working orders. Let's see if this will show up. So August, this is a waterfall strategy 2. This is a waterfall strategy 2. And then I have some pending orders. June 30th. This one is 20 wide, 25 wide. So this is like making, we did this one on Monday's session. So this is risking 4 to make 1 with a $20 profit trap. That is a, what is this? This is not, hang on. I'm going to do this. I think some it's not filling the activity section for some reason with this account. There. All right, here's an example. This is just another account. I don't know why it's not showing up here. I literally posted all these trades yesterday. There we go. All right, everybody see this? So waterfall income strategy 2, waterfall income strategy 2. These are all pending orders for about that 11 to 13% return on risk. So I do have them in. I'm not going to make them official group trades because I don't want you to have to take that type of risk. I wanted to share them because mechanically you can go out and do the same thing I'm doing. You know, the only reason this risk is like $1,300 or $2,300 is because the strikes are like 25 wide. If we go into weekly waterfall income every Monday, I've been doing this, you know, much tighter setups as far as reward to risk. Here's my waterfall income. You know, we're risking 4 to make 1 with a $1,000 profit trap. We're risking 450 to make 50 with a $1,000 profit trap. We're risking 4 to make 1 with a $1,000 profit trap. Like that's what we're doing. So I told everyone at the very beginning of the year, I'm still going to do this and keep the risk profile much, much, much tighter on our waterfall income trades this year. Okay. So if I get the 50 out of 450, I'm making that 11.1%. If I get one for a dollar out of the $4, I'm getting 25%. So like I said, between 11 to 20%, 11 to 15%, that's not counting any profit traps. That's my return on risk for doing something that's about 10% lower than current price. Okay. So like I said, I am putting them in for my managed accounts. I'm not making them official group trades because the risk is much higher. So if you don't want to risk $1,300 or $2,300, don't take the trade. But for me, these are, you know, 0.25% risk, 0.5% risk. So I'm going to start getting those trades kind of stacked up a little bit. That's all. Okay. Oh yeah. So Chuck, those are just bonus trades, man. I put these in Telegram here. These aren't daily profit play. These are just bonus trades. So again, I put a little summary here on my Telegram. Software catching a small bid Wednesday. Bonus trades if you want them. I'll manage by Thursday near the close or Friday during the day. You know, all the magic kind of happens around like 2:33 p.m. Eastern time on Friday. So looking at IGV top holdings and playing some one-to-one traps at recent lows, all of these would have to require price to move outside of the expected move to the downside for us to be in any trouble. Okay. So if price is current or higher, there's no risk in these trades, and price just, you know, we make $20. Cool. Not excited about that. If price is going to stall and come back and revisit any of these recent lows, this is where it gets a little bit more exciting. This is where my profit traps are sitting, potentially up to like $1,150 of profit traps sitting in these IGV type holds. So this is all software stuff. This has been one of the most beat up sectors. Do I think it can catch a bid? Yes, but I'm not going to chase it when it's already up like 3, 4, 5%. I'm not going to chase this thing at current price. I'll go to the lows and I'll set up a fair, you know, kind of one-to-one trade. Can you still place them? Yes. There's just make sure you get these filled. If you're going to take these trades with me, get them all for credits. This is a 10-cent credit, which is not that exciting, but don't fill them for a debit. Okay. If you fill them for a debit, that's a risk of $5. I don't want that. Give me 5 cents credit. Give me 10 cents credit. Give me 7 cents credit. Give me 3 cents credit. So you can see these aren't big credits. They're just essentially free profit traps at the lows. Okay, so they're still good. Still good. Okay, very good. Let's just check daily profit play on the day. Now that we've been at it for about an hour and a half since the open, 2 hours live, daily profit play is up about $65. Not bad. We're still sitting, like I said, about a 92 to 98% chance of profit on this trade. So I can hang on to it a little bit longer. I'll do this. I'm going to set a take profit at close. I'm going to go 15 cents. Give me $90 out of the trade. I'm going to go 15 cents. Okay, I'll keep an eye on this one. This is going to take more time, obviously, to decay down to 15 cents debit, but hopefully later in the day we're going to be safe. Uh, is that Manish? Is that a what is the margin requirement? Margin requirement for these bonus trades. This one's going to require about $500 of buying power, about $250 in buying power, $200 in buying power, $200 in buying power. So just like $1,150 buying power. And if you want me to be the guinea pig and take the trades, so be it. I'm in. I'm in the trades. So you can just wait and see how exciting Friday gets at the close and see if these trades are worth anything. My expectation for the trade. My expectation. I said that weird. My expectation for the trade is that if the markets are going to be higher Thursday into Friday, we're just going to make 15, $20 on this, and there's no upside risk. But I don't know with this Nvidia earnings thing. Like, I just think this market could set up for just another very aggressive pop and dump. Like we get to 7,000 and we've had some ugly intraday sell-offs, at that 69.50 to 69.80 to 7,000. Those sell-off days have not been fun. So if Nvidia does it again, like, oh my gosh, man, it's gonna be annoying. But I'm not banking on that. It's like if Nvidia is solid, all of the disruption that's been going under the surface with this dispersion trade that's been talked about the last couple months, if the coast is clear and the market's catching a bid, we probably break this high and we go to 72.50 or go to 72.26. Like, I would not fight that. All right. But if we get to this breakout point, I'm probably going to call like another short-term trade to maybe see if we go back down and we have a sell-off. The hardest thing for me in 2026 is to believe that we're just going to another 10, 15, 20% year. I don't think that's going to be the case. So if we're up here, up here, up here, up here, up here, like if we keep going higher, I would just set a trend line. And if we roll over this thing by the end of this year, probably November, December into 2027, I'm probably going to be bearish. I don't think we can sustain this. Okay. I don't think we can sustain this in a near-term level. I don't think our earnings can sustain this without having just a crazy, the up K is killing it. The down K is getting killed. Trump said last night at the State of the Union, the government's going to start offering $1,000 for a 401k. I mean, it's essentially the same thing as your Invest America for kids, but now they're doing it for 401ks for adults. I mean, your employer typically matches, I don't know, 3% of your contributions, some up to 5%. If you work for an academic institution, I mean, if like teachers and people that work at colleges, I mean, some of these are crazy. They get like 5 to 10% matches in their retirement accounts. I mean, a lot of financial advisors work with millionaires and they're teachers because they've been teaching for 20 years and their, freaking 401ks are 8% a year, 10% a year for 20 plus years, and they have a crazy good match. But I don't know. Anyway, it's just, I think Trump has to win the midterms in order for this market to still stay bullish. If they lose the midterms, I don't know. Look out. I think the market's going to absolutely hate it. But we'll see. That's risk that I'm not really worried about until later this year, November, December 2027. We'll see. All right. Friday fun trades. I'll I'll build a I don't know. I'll build a little thumbnail for that. Chuck says, "Can you help me with the trade? The trade is MRK. Couldn't seem to close it out. Bought the 123 call. Sell the 125. Tried to close it when it reached 205%. Would not close. What's it trading for right now? I mean, you're not going to close it out for a profit now, right? If you buy the 123, sell the 124, you're trading at 123.24. This trade's not going to offer any profit. When's it expire, Chuck? Expires Friday. I mean, I'll look at the same trade with you. So MRK. By the way, do I have any exposure on this one? MRK, I do. It's not a bad winner. I'm up almost 7 grand. Naked puts. Stay out of the way. That would have been a nice runner this year. What's this thing I'm year to date? Year to date is up 17%. All right. Yeah, I just went way out here. Anyway, sorry. Let's go back to you did a 123 by 124 MRK. So trade 27th. It's a call spread. I mean, right now it's showing 50 cents. What'd you pay for it? So, I mean, very briefly, you had this thing up to 125. That would have been some profit opportunities. You paid 30 cents. Just take the profit. I mean, your break even's 123.30 and it's trading at 123.25. The fact that you can get out of this trade for profit, I would say just take it. If that was my trade, I'm taking the profit. Because what you need it to do is you need it to be greater than 124, right? If it's greater than 124 by Friday, then your 30 cents can close out for 70, right? So the most you can make on the trade is, you said 205%. That's not true. I mean, you're making 70 out of a risk of 30. That's the most you can make by Friday at the close. So you're telling me you tried to close it, I'm guessing at like 60 something cents. Or I guess you try to close it as close to $1 as possible, but right now you're trading inside the strikes. So if it's me, you're risking 30 cents. Then I don't know how big your trade size is, but if you can go from 30 cents, close it at 50 cents, you're getting nearly, what is that, 70 something percent? You make 20 out of 30, you're getting 66. I mean, that's still a good trade. I'm fine with, I mean, I would just take the profit. Because coming into Friday, it's like you want this to be greater than 124. If it's not, I certainly don't want it to be less than 123 because that's a loss. So I would just take the 66%, move on. You tried to close it out at 200 some percent, didn't happen. Just take the profit, take your 67% gain, and move on. So does it close now? I mean, you got a bid price at 35. You're still able to make money on it. But I don't know how to close it. All right. Well, come on, man. I mean, if you're going to take trades, you got to know how to open and close trades. If you bought the call, sold the call for a 30-cent debit, then you put in this trade and close it for, let's try to go like 50 cents. So here's the deal. You did who's your broker, by the way? So if you buy to open the 123 call and then sell to open the 124 call for 30 cents debit, you're in Tasty. Oh, dude, it's so easy then. So if you've got the thing in Tasty, just highlight the 2 strikes and you want to close it. So close both for a 45 to 50 cent credit. Right? So go highlight your strikes. So if you have a debit spread in here, let's say I take this trade. Let me find it. Let's see if I have a debit spread somewhere. The hell? I know I have one in Google. Here's an example. So I would just find my trades. Here is a debit spread. So all I do is I would take, oh shit, that's a ratio spread. Hang on. There. Here's a debit spread. So I highlight my 2 strikes and I would go close and put in 45-cent credit or put in 50-cent credit and send it. So you're in for a 30-cent debit. You try to close it for like 45 to 50 cents credit. That's your profit. And that hopefully gets you out of the trade today for profit. You're at, 65, 66, 67% return on risk. Not bad. Could be worse. But you're inside the strikes right now. So it's like you need price to go back above 124. Or if it dips below 123, you're at a loss. So I'd rather just take the profit now. That's just saying, if it's my trade, that's what I would do. Make sense? You good? But it's a butterfly trade. 123, 120. Oh, I see what you're saying. Okay, all right. Sorry, dude. I didn't see that earlier. 123, 124, 1. Oh my God. You did a one wide butterfly? Okay. Let's start over. Okay. So a 123, 124, 125 butterfly. There. Okay. Now we have a different situation. If you have a butterfly trade that was 30 cents, that seems pretty expensive to me, honestly. You paid 30 cents for a one wide butterfly? When did you take this? Were we already trading up to like 125? I don't, it doesn't matter. It doesn't matter. Anyway, the trade right now is trading for like 13 cents. So if you close it today, you are you're going to take a loss. So you're 30 cents. Okay. So here's your break even. So 123 by 124 by 125. So it's a butterfly for 30 cents debit. That means your break even is 123.30 on the low side, and your break even is 124.70 for the I mean, gosh, it's like, so your max profit is 70 cents, right? And so if price is greater than 123.30 or less than 124.70, you'll have your max profit there of 70 cents. So at this point, if you close it now, you're going to take a loss. I think the better trade is just to let it ride, which is totally different because I thought it was a debit spread, but now it's a butterfly spread. If you close it now, it's a loss. So by Friday, and again, for a one wide, you're not really going to be able to close this thing out for the profit that you want because a one wide is so tight that the options, like the option values, will move pretty much in tandem because they're so close together. So by Friday, you want price to be greater than 123.30 or less than 124.70 because this is a standard butterfly, right? You got in for a debit, you're trying to close it for a credit. So this would be a dollar credit max if price is in between these levels. Okay, so if price is less than 123 or price is greater than 125, you're going to eat that 30 cents. But if price is in between here, I mean, obviously the closer you get to 124, the better. So if, let's say, by going into Friday morning, I don't know. I guess if it was, I'm just putting myself in your shoes. If it's my trade, if I know that I'm in for 30 cents and this thing by later today or by tomorrow or by Friday is showing 45, 50 cents credit, 60 cents credit, take the trade off. Like, just take the win. Because it's too difficult to know exactly where price is going to be by Friday at the end of the day. So if you pay 30 cents and it's offering 45, 50, 60 cents credit, just take the trade, take your 75 to 100% winner and move on. That's my thoughts on the trade. But closing it now would be a loss, so I'd let it ride for another day and see if this thing offers up profit. That's all. All right. We good? Okay. Let's wrap it up there for today. SPX still looking decent. SPX DPP up about $75. Watching. and still watching. I'm just going to hang out. 15-cent debit. I might bump it up to 20 and take $85 out of the trade today. That's fine. Obviously, I was playing it pretty safe on the deltas. Like, I wasn't sure if we're just going to gap up and move up all day today. But if you're in daily profit play, take some profit. Not a bad idea to take some profit. Don't let this turn into a losing trade for sure. Okay. So I will hang in there just a little bit longer. I'll watch price. Obviously, price hasn't really done much of anything. So it's still like pretty darn calm for the day. Flows still looking positive. I mean, like positive gamma. I'm not seeing anything lighting up here. Here's my real-time gamma as well. So unless we're going to like start backfilling that move today, which maybe we do, but I think the market's up a little bit. Like I said, software catching a bit of a bid. So hopefully we just hang out here around like 69.15 or higher. Maybe it's just a big quiet range day. Is the VIX doing anything today? Not really. I mean, the VIX isn't jumping or anything. So as long as we don't have the VIX like rising, I think we're just going to hang out for the day and see a win. So I'll set a chart alarm of the VIX at 20 and see what price does. Otherwise, just let it just chill and hopefully hit our profit target. There you go, Larry. Damn, dude. 140 out at 45. Great. That's a great trade. What were your strikes, Larry? Where were your strikes at? 69.60. Okay, so right above that expected move, 68.85. Gotcha. 10 wide. Buck 40, 10 wide. Yeah. So a little bit lower, a little bit higher. Hence your better fill. Yeah, good stuff, man. Nice win. Nice win. I would expect nothing less. Okay. All right. I'll let you go for today. Thanks for being with me. We'll have some, some bonus stuff to watch for Friday. Obviously, it's nice getting the market, catching a bid, NVIDIA earnings after hours. Let's see what happens. We'll come back and grind again tomorrow.